Real estate experiment. What is happening, y'all? Happy Sunday. The lab stays open. That is the wonderful thing about it. And I had a acquaintance who's working with another agent who's has an 8 unit that he's looking at, and so I thought, send me the numbers. I'd love to look at them to see what's up and ask for some of my advice. And I'm just looking at the numbers. It's not in my market. It's actually in Minnesota. So if there's any Minnesota investors out there, I'd love to know what's happening on your side of the country in terms of cap rates. I'm just looking at some of his numbers here, and all right, all right. Don't get greedy now. I had to put the address away. We'll call it as the real estate experiment. But more importantly, what we're looking at is a $680,000 purchase price. This is in Minnesota. Again, not my market. It's an 8 unit. And more importantly, we'll look at here the net operating income is 51 grand 687,000. Again, that's the, as we know, the gross income potential subtracted by the expenses and the taxes gets us that, and then the debt ratio is going to be, or debt service I should say, excuse me, is going to be the 3,100 a month, a monthly payment times 12, which is about 25K, minus the 51K gives us around 14K. So that's more or less what we're going to use for the, I guess, cash on cash return, which you can see on the right side is 10.64%. But for the, as far as the cap rate goes, I think there's a few things that I don't know, and you guys correct me if I'm looking at this incorrectly. But I don't know if this is a Class A, Class B, Class C. That's more information I can probably find out because this isn't my market. And the reason why I think that's important is that allow me to know what the cap rates are going for that market in respect to its class. Another thing that I don't see is vacancies, which would have an impact on my net operating income. Again, maybe for an 8 unit, there's less likely that it's vacant because it's not as big as a building, but there's still that chance, right? So I'd have to look at the rent rolls. That's one of the things that I note here. 7.6, I think, is the key. Is that more or less the decent in Minneapolis? Where am I? Minneapolis, or not Minneapolis, I should say, just Minnesota. It's right outside there, Minnesota. So love to know what again, this is a far-fetched pitch, but what are you investors seeing out there, and what else would you be looking at in any market? What else have I missed? And that's about it for you Einstein investors out there. Coming to the lab, and I would love to hear what's happening in your market, what you look for. I know some investors look at it a few different things. Some of them even go for lower cap rates if they're playing a long-term game, whatever the case might be. Again, getting into this, it's all about learning from people. So I'd love to hear what you guys are looking for in your market, in terms of as far as numbers and income statements go. You'll notice I didn't include the appreciation because I stayed away from that. That's usually an icing on the cake. I like to figure out what's happening today, and then the rest is just extra credit. Also didn't include the debt coverage ratio. A little bit more complex, but otherwise, just based on that, love to hear some feedback. On that note, put your lab coats on, y'all. Put your goggles on. Welcome to come in, have a look, and on that note, we continue to build. Let's build, y'all.